Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm excited to share with you that we've created a new series. This is a topical series where we've taken previously recorded clips, compiled them by topic, idea, and particular concepts within the infinite banking footprint and the financial world broadly. Topics will include loans, loan repayments, paid up additions riders, other riders, dividends, long-term thinking, what could go wrong, what does go wrong within the infinite banking footprint. And I hope you enjoy listening. And it was created for your edification. Thank you.
When we took the money out of the 401ks and IRAs and all that and took the tax hit and used it for to finance our bank. If you do that, that's a scary thing to do.
Yep.
But you're doing it with the attitude of taking that money that you're bringing back home, so to speak, and you can't just put it in the bank and let it sit there and draw dividends, because that's not nearly as effective as taking that capital you have and putting it to work for you to make more money for you. Mm-hmm. That's the whole idea of capitalism. And by buying those notes that we did, we're putting that money to work because now we were capturing the interest. But let's say you didn't owe anything and you were debt free to start with. You could now take that capital out of that you're from your bank, and you could use it to start a business, or you could use it to
buy more real estate,
or something like that, to put it to work to make more money, which will far run the amount of money that would have been made in the 401. Again, not financial advice, because I'm the last one in the world you want to get that from.
We're just telling what we do.
Just what we did. Yeah. You put the money to work for you that will make more money than what it was sitting in the bank.
I agree. And being a realtor since the mid to late 80s, you've got somebody out there buying the notes, looking at the property, and knows the market, right? So mm-hmm. That's almost like, I don't want to say a no-brainer, but the best investment that we all have is in us, number one, and then number two is in something that we know.
Yes.
Right. And real estate, y'all know real estate.
Can you tell him the deal about the house on the lot? And we use the money?
I can.
Are you okay with that?
Yeah.
I was trying to think. This was during the pandemic, 2020. I had a client come into my office, and he had a house that was in terrible condition, and he just wanted to unload it. And he said, I want you to look at this contract that an investor made to me and see if it's a good, solid contract. And I looked at it and I said, yeah, it's a great contract. Are you thinking about accepting it? And he said, oh, yeah. He said, I just want to get rid of it. I said, would you consider letting me take the place of that investor? He said, Becky, I would love for you to have it, because we had a good relationship. Right. And I bought a house it was actually on 2 lots, so it had 2 acres. And I went to look at it. It had a hole this big in the roof. It had 13 cats. It was full of stuff.
Let your imagination run with that.
It was full of stuff.
It was horrible.
I mean, it was nasty. I would just tell you, it was so nasty. I didn't even show it to Jerry because I knew he would.
Yeah, I saw it later. The farthest I went was the yard. The yard. Yeah, I wasn't going past the yard.
But it was awful, and that was and then I bought it in March when we shut down. And anyway, I had them start cleaning it up.
And you used the money from the...
And I borrowed the money from our life insurance to buy the house and lot. And I'll just say, it didn't matter to me. I bought the house in 2 lots for $140,000. Well, once I got into the house and realized how much stuff it needed, it just was a little overwhelming for me because I'd never done that much work to the house. And so I said, I'm just going to flip the house on 1 lot and sell it for what I paid for it. Sold it like that within just days. And I kept the lot, and I sold the lot for $85,000. So I had in
2 months.
We bought it in March. I sold the house in April, and then I sold the lot in June. And so in that period of time, I was able to take money out of the I was able to get a loan from our bank, purchase
Insurance. Not the bank.
Well,
Loan, you borrow-
our IBC bank, our life insurance. I was able to borrow the money from the life insurance, purchase it for cash, flip it, and make that $85,000 in free money, as far as I was concerned.
And pay our bank back.
Back.
But the idea of having that money sitting there available, because
enabled us to take advantage of this
when an opportunity comes, you have to jump on it. You can't wait 6 months to do it. You have to do it right then. Yeah. And so it was great that worked out. And to me, it's a classic example of why you want to do this.
Yeah.
We were starting to make progress with getting some credit started with conventional banking. And then we started the aircraft rental business. It's called Freedom of Flight. And then it started all over again because we can't get credit on the old business, of course. And so I was so frustrated with trying to be responsible and start these businesses with my husband. He's my hero.
Great guy.
Yes.
Aircraft mechanic, how many years that he was?
Oh, goodness. 35 years, 40 years.
So these relationships with the bankers or the non-relationship with the bankers have been going on for some time?
Yes. And so I just started searching the internet and YouTube, searching for a way to just get capital for businesses that were up and running. And then I came across Banking with Life. And I started researching because it started to make sense in so many different ways. I tend to be a person that has to get 5 uses out of something, just about anything. And I kept going round and round and learning and asking myself questions and researching what made sense. And, family's so important. And to be able to provide that security for my family in the event of my death, that's huge. But to also be able to accumulate cash value at the same time as a part of the same life insurance policy, amazing. And earned interest or a dividend is my understanding. I've only been doing this for, as we mentioned, a year in August. So I'm not claiming to understand all about how it works, but I understand that there's a dividend associated with the cash value, plus the death benefit for my family, plus being able to take the loans out that don't show on my credit report to run my businesses, plural, whichever business needs it, no matter how long it's been open.
And every business needs capital.
Yes.
Every business. That's pretty cool. So keep going. I don't mean to interrupt you, but.
And I'm beginning to understand, in my mind, conceptually, how cheap money is as a word. It's capital. And controlling the capital.
I love that.
And maintaining our vision and moving forward cross-generationally, to have all of that come together in whatever you want to call it, your own bank, life insurance, whole life insurance policy, conceptually, so far, I'm convinced that it's what's right for me and my family.
How long, when you were searching for, some type of banking for businesses, how long did you discovered or stumbled onto the idea of becoming your own banker, Banking with Life? How long did you listen and kind of research and read about that before you made a decision to, I'm going to put this into action and actually reach out and say, I want to buy a life insurance policy to become my own banker? An idea?
I would think maybe a month of just casually listening to your podcast and others.
That's pretty quick. 30 days.
I became somewhat obsessed. And
30 long days.
So maybe it was 2 to 2.5 months before I gave you a call, I would say. Okay. It's kind of hard. I don't know. I haven't looked back at that time frame. I just remember coming across your podcast and thinking, oh my goodness, this is it. It's not tied to my credit score. It doesn't matter if I've been in business 6 months, 2 years, 70 years. If I have the cash value, I am able to take that as a loan and still use that money in my businesses to produce cash flow, and it's gaining a dividend at the same time. How can, as long as I am responsible and continue doing what I'm supposed to do with policies and loan repayments, the guarantees are there. How can that even be possible in today's world? And so I don't understand how so many people can be bad-mouthing the system, and I don't claim to know everything. All I'm saying is, so far, to me, in vetting the process and in being involved in the process, everything has gone better than I thought it would.
Really? Mm-hmm. Better. I love that.
It's easy enough concept to do, but the beauty of it is you don't have to get into marketing and sending out postcards, spending $3,000 or $10,000 a month on direct mail or do pay-per-click and all that kind of stuff. It's just your time you're utilizing. So
I gotcha. And if they're going to go into, I don't care what people are doing, they should be accumulating capital that they control. And I think the best place to do that is within properly structured life insurance policies with, a mutual company. And there's probably, 15 or 20 mutual companies across the country that you could do this with. But when you go through the vetting process of a life insurance company that you can practice the infinite banking concept with and check all the boxes, we really get down to a handful of life insurance companies, and I'm not going to mention their names, but, I know you own 2 different ones, and that's really about all I'll say to your personal business. Other than, I don't know, you may with all those deals you're doing, you may want to increase your premiums. I'm just saying.
Yeah. It is something I'm thinking about, James. I'm definitely thinking about adding more for sure. And I'm sure I'm going to in the very short term.
Yeah. But the listener really should take the opportunity to vet this idea of the infinite banking concept, whether or not it makes sense to you. And it should, in my opinion, make sense to everyone to control the banking function, because in my opinion, I don't care what you're doing, but especially in real estate, if you can control the banking function, you're just that much further ahead. At any time, all of these notes are callable, and I understand that non-recourse loans are available, but most people in the real estate world don't own them. All right?
Yes.
And so anytime the bank can change hands, they can go through and reshuffle their loan portfolio. They can reclassify their loan portfolio. Oh, that was an A loan. We're going to make it a C loan. Oh, that C loan or B loan's a D loan, and we're going to call them. Notes are callable. And so control is probably one of the most important things we can do. And then not only while we're controlling things, our cash flow, where our money resides, we might as well control the leverage if we're in real estate, and we absolutely should consider controlling the banking function. And if we don't, so banking is, like Nelson says, right? Banking it's the oldest profession in the world, because somebody financed that first profession that is normally called the oldest profession in the world. So banking is, and if you abdicate your responsibility of controlling that banking function, it still exists because banking is, and someone else is going to perform the banking function and they're going to profit from it. And that's ultimately what we're forfeiting or bypassing or giving away when we don't become our own bankers, right? So
totally control, like you said, James, most important thing. Let me give you an example from a real estate investor standpoint here, just recently, because, the market's changing, everything's shifting, interest rates have shot up. They've more than doubled this year, or had doubled at one point, which has never happened in the history of the United States. It's never in the same calendar year doubled interest rates for mortgages. So with that, these lenders that we go to were pulling back. So there's a few different properties I was going to get financing on. And originally they just required a BPO, and a BPO was just a broker's price opinion, cost a couple $100 to do. So I spent $600 for these 3 different properties to get that done. And then they email me a week later saying, hey, we can't do those BPOs anymore. Our lenders are pulling back because of market conditions. They're afraid of recession. They now want an appraisal, and appraisal is going to be $600 per. I'm like, what happens to my BPO? I just paid $200 for it. Sorry, you're going to have to eat that and just get it. So this is what I talk about, like having a power within your hands. This is why you don't want to be relying on the banks. And this is why I'm trying to make as many relationships too with private lenders, people who want to lend money out against the real estate here and just get a mortgage position here for the short term while we're holding them till we refinance them. So that's why it's important to have these policies so you can control that, so you can utilize your own funds and do it. And it's losing that control of the money is the biggest thing. And you hit the nail on the head when you said that, James. Yeah. Hit the nail on the head big time with that.
Thanks. And then too, most real estate investors I've learned and seen and experienced over the years, they rarely ever value their own time, effort, and energy. They strictly focus on, and I get it, you're trying to make the deal and try to be profitable and not go backwards. I get that. But most people, and especially real estate investors, they don't even value their time. They don't put that value of their time anywhere in the deal. Now, in a situation like yours where you're teaching people, that's something different. Then, obviously they see the value of your time. You see the value of your time. And, but you didn't start out that way, or,
no.
You started out, you didn't even think about that. But, and my point here is it's important that, when you're looking at life insurance, you're typically looking at life insurance illustrations, and then the real estate investors almost always focus on the rate of return, the interest rate, or the dividend scale, or the guaranteed increase in cash value, or however it's presented, and that's only part of a function of a life insurance policy. And it's only a very small part of the deal that you're going to go do anyway.
Yeah. Exactly. You're going to be doing this deal anyway. Why not fund it yourself if you can?
Yeah.
I mean, it's simple. It was simple setting up a budget for me for what I could afford for at that point when I created this policy. And now that I can afford more, I think like you said, it makes sense maybe do another policy too, right? Yeah. Another whole other policy you're coming up against. And I did policies on my kids. The reason I got policies for my kids is because twofold, right? Back in the day, I've really become anti-college, even though I'm a college grad myself, because these professors you're not getting your value, right? When I went there and graduated Drexel, it was $18,000 or $20,000 a year. Now it's $76,000 a year. That's unaffordable. Kids are coming out with mortgage payments, and you can't bankrupt it or get rid of it. So I'm not a fan of it. I don't think you need college education anymore. You can come out at high school. My middle son gets it. He's going to go to trade school next year and go into HVAC, which would be great. Because it'll be printing money because there's such a shortage of contractors. And, whether it's electricians, plumbers, or HVAC guys. But I was talking to my electrician. This is actually a really good point that I never thought about. He was pushing my son to HVAC. I'm like, why? And he goes, because electricians, all the new electric, all the stuff we put in now lasts 50 years. So I'm doing a job and I'm doing it once. Yeah. There is no there's no repeat, right? And I'm not going to get repeat business here. Every once in a while, a fixture will go bad and I'll come out and replace that. But HVAC, those things have really short life cycles, especially in Florida where the air conditioning is constantly going. It's like those guys are printing money, right? So it's a great point. Now, the trade schools are up 35% this past year. They're up 35% from their normal enrollment. So people are starting to get it and getting away from the college, the overpriced college. This blows my mind, James, that you can bankrupt a hospital, which actually helps people, but you can't bankrupt a college, which doesn't really educate you. You can call it education, but it's really more indoctrination.
My pastor used to say, you don't have to use the word, I can't afford it right now. I can't afford it, but it's just not wise for me to do this at this time. I don't like use. I don't like that term either. I didn't have enough money to buy a bag of peanuts or Pepsi Cola. I don't like using the term "I can't afford it." The devil is a lie.
That's right. I love that. I love that. You know, words have meaning. Words have power. You know, if it comes out of your mouth, it's on you. You know, and you don't. And I'm just saying that you shouldn't let stuff like that get on you. You know, I choose not to do that today. You know, not in my best interest to do that today. I like that. My daddy used to say when I was young and if I was griping about the cost of something and, you know, I say, oh, that's too high, or, you know, they want too much for that. And, you know, I just remember, you know, like if I said that, you know, it's too high, that's too much money. You know, he would say, no, that's not too high. You can't afford it. You know, and his encouragement to me was to make something happen, right? Go out and create the wealth, you know, go to work and spend less than you make. And, you know, of course, it used to tick me off too. And I was, you know, a little bit insulted, a little bit hurting the pride, you know. But the fact was my habits in situations like that needed to be changed. You know, it's, you know, you're going to spin, and then decide to count. That's backwards where I come from. You know, you've got to accumulate something. And then, you know, like I love the timeline, the way you went through the numbers and those individuals, those gentlemen, their 401k balances. And if, let's say that I can only pay $10 a day, $50 a day, whatever it is, instead of it going into a 401k, I'm going to pay a life insurance premium. And if I do that, because I have discipline, I mean, we can go out. The further out we go, the bigger the numbers are going to be because it only goes one way. The cash value increase in life insurance only goes one way. Okay. And so now I got time. But if you got 25 or 30 years on your side, you know, there's only two, you know, time being the most important. But when you put time and money together, the longer the time period, you know, the greater the compounding. There's no secret about that. But if I'm systematically accumulating capital, i.e. paying a premium, properly structured policy that has a legitimate cash value with a legitimate company, it's gonna only go one way. It's gonna accumulate. But now when we bring in the banking, it'll have a rate of return on it, right? No question. But now if we bring in the banking function, I can collateralize that and get out of debt, like in your case, or maybe go make an investment or whatever I was going to do anyway, without interrupting that compounding. Man, that's powerful. And my encouragement has always been for people to expose themselves to the idea that they can control the banking function. And when you ponder on things like that, and we all, when it comes to our money and wealth, I get it. We all like to pencil the numbers, you know, and I think that's human. Man, when you pencil that for a year or 2, 6 months, and whenever you can see that you can accumulate money and collateralize it without interrupting the compounding, that'll blow your mind. That's a complete paradigm shift in thinking, to the point that it will cause you, or could cause you, to maybe change your actions. Man, that's powerful.
Yeah, I'll tell you. So when I heard it, I got the concept pretty quick. And I took a bite of it, and I've been chewing ever since.
Right. I love that. I love it. Well, so what else? What else do you want to touch on, Eugene? You're like
one thing,
full of wisdom.
One thing I said one time, I said, "Do you know you could do a good thing at the wrong time?" I said, I'd rather do a good thing at the wrong time, but anytime you do the wrong thing at the wrong time. When you're doing good things, say, for example, I'm saving money. That's a good thing. And in this particular case, I say the wrong way. You're not going about it the wrong way, because as I mentioned before in this podcast when they're talking about this dude said, well, I never heard of anybody having cash value within the first 2 or 3 years. I said, well, I can turn you on to something to give you a cash value in the first 3 or 4 weeks. And they just wanted to call me wrong, and I didn't know what I was talking about and all this kind of stuff. I said, well, obviously, I know somebody that knows more than you do about your own business. He said, well, I never heard it. I said, well, and I've been in it for 24 years. I said, well, you've just been ignorant to the fact for 24 years.
My oldest son went to college, out of state. And he lived his first year at the dorms, but then the second year, and this was my wife's idea, so sometimes you just got to listen to your smart wife.
Sometimes.
And just don't admit it, but you just should. And she said, well, he's living in another state, and he's not going to be living in the dorms. Why would he pay somebody else to live in an apartment? Why don't we just buy an apartment? And then he can be a resident of that state after a certain amount of time, and then he can get in-state tuition. Okay. So.
And we have the apartment.
And we have
that
an apartment.
We can rent in the future.
So she found an apartment, and that was for sale. And it was in a big building, very close to the university. And most of the units were owned by investors. So it was less than 50% owner occupied, which means you cannot go to a bank and get a mortgage because of Dodd-Frank and all the regulations that came along. You can get third-party financing, but you can't get a traditional mortgage, and third-party financing is expensive. So I called up my insurance agent and I asked him, can my son borrow money against his policies? And he said, absolutely. And I said, so what's the interest rate? And then does the policy continue to grow? And he said, the policy will continue to grow as if the money's in the policy, the money you get from the life insurance company, and the difference in interest is about 0.5%. I said, so wait. I'm able to borrow this amount of money. Now, this is not a huge apartment. It's like 700 something square feet. It's a little postage stamp, 2 bedrooms, and it's designed for 3 people to live there. This is the East Coast. There's not elbow room like in Texas, okay? But he basically used his policies as a bank, borrowed his own money to buy an apartment for himself. And because of all the money I've been gifting him every year to stay, at the state tax exemption, he actually had funds to support himself through college, because I've been saving since he was born. So for 18 years, I was saving aggressively so my son can go to college, because that's what my parents did for us. They saved for us so we can go to college. And so he could prove that he does not need to depend on anybody else from another state. And he was a landowner. He was owner of a property owner. He owned his own apartment, and he rented out the other apartment to other students. So that covered some of his expenses of living.
And
so he actually had an income.
The loans.
And he was repaying the loan some.
Yeah, his cohabitors.
So he had a loan. He was paying the loan back. He rented out part of his apartment. He was earning an income. And he was able to get in-state tuition because he was truly independent. He wasn't dependent on us for finances. And so in-state tuition was a lot cheaper than out-of-state tuition. So even if that apartment did nothing else, that savings alone was gigantic. But I couldn't have done that. He couldn't have done that. I didn't do it. He did it. He could not have done this without having his bank So what I thought was a retirement plan was a banking life insurance policy. And it gave him financial choices. And when he graduated, he sold his apartment to his brother.
I love
who
it.
took out loans from his life insurance policies. And then my
It was an all
older
cash
son,
deal. Your brother, the
Correct.
brother didn't even finance it for it. It was all cash. I love it.
correct. And then my older son used that policy to pay for graduate school expenses. And so I was banking. And then I decided a few years later to read that book again because it takes about, I'm a slow reader. Even though I'm a highly educated slow reader, I'm still a slow reader. But I could read that book in a night because it's that small. And I
easy to read.
reread that book. Yeah. And I'm like, we are doing, my family is doing, my children are doing what this book says to do. We have created a banking system with plans that had the intention of retirement, but they were well-designed life insurance policies from an excellent agent, who's my agent till today for those policies. And those policies were amazing, and they had all kinds of options to be able to get additional policies. Each kid can get an additional policy every 3 years until they're 40 years old, without new underwriting. I mean, he phenomenal life insurance agent. I mean, really did very well by my family.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.